Hi everyone, my name is Sean Dole and I'm a senior in the AIM program covering domestic financial services. Today I'll be pitching Hamilton Lane, ticker HLNE. I want to start by describing how I found this company. I looked through the top holdings of about 25 small cap growth mutual funds and looked up any financial companies they were holding, which there weren't a lot. Hamilton Lane was a name that I saw multiple times in these funds. When I looked up their story, I was intrigued by their focus on the private markets and the tailwinds for this market in the current environment. I also saw that their stock price had recently dropped, so it would be an opportune time to pitch them. Hamilton Lane operates around the globe with 8 offices in the U.S. and 9 in other countries. They help institutional investors buy, manage, and sell funds and direct investments in the private markets. They have $68 billion of assets under management and $447 billion of assets under advisement. Assets under management are either invested in customized accounts or specialized funds. Customized accounts are designed for specific client needs and objectives. Specialized funds are usually funds of funds that are open to client investment. The vast majority of their revenue comes from fees on AUM, while a small amount comes from performance fees that they take off of client profits. Hamilton Lane has experienced tremendous growth. From 2016 to 2020, AUM grew at a 17% CAGR and AUA increased at a 19% CAGR, while the industry only grew at 10%. This outperformance is due to their competitive advantages. Hamilton Lane mostly sits between private equity fund managers and investors. This allows them to focus on manager and fund research to create the best funds for their clients. They also have a focus on technology and data analysis that makes private market investing more transparent and accessible for investors. Finally, when we buy an investment manager, we are really buying their employees' abilities to create returns. Hamilton Lane has a very well-recognized culture and history of strong returns. Because of these competitive advantages and their growth drivers, it is recommended that Hamilton Lane be added to the AIM Small Cap Fund with a price target of $74.28. On to my first driver. The stage is set for the private markets industry to experience outsized growth. Since interest rates are going to be very low for a prolonged period of time, institutional funds such as pension funds will be looking for yield. The private markets have historically returned 13% per year, which outpaces public equities, and they allow investors to diversify away from these volatile markets. In this macro environment, I expect there to be a shift towards greater allocation in alternative markets. Also, Hamilton Lane is jumping in front of the trend of making private markets more available to retail investors. They launched a fund in the international markets that is targeted at high net worth individuals, and they are now looking to bring this to the U.S. The industry is expanding at all levels, and Hamilton Lane is positioned to take advantage of this growth. Another focus for Hamilton Lane is the international markets. They believe many institutional investors abroad are underinvested in the private markets. In fact, in 2019, pension funds in the U.S. had an allocation to alternative investments of 26%, while the UK and Japan were only 11%. Less developed countries are most likely even more underinvested in this space. Hamilton Lane has offices around Europe, the Middle East, Latin America, and the Asia-Pacific region where they want to make the private markets more accessible. Historically, their international business has grown at an 11% CAGR, and this trend is set to continue. Now for my third driver. As I've mentioned, the private markets have traditionally had a lack of transparency and accessibility. Hamilton Lane wants to change this for its investors. They leverage their decades of experience in the industry to create proprietary databases and research reports for their clients. While the direct revenue impact of this service is hard to quantify, it does help cement their competitive advantage. For my valuation, I performed a DCF using a WACC of 8.02%. For my WACC, I used a cost of equity of 8.96%, and since the firm operates in private equity, added an industry risk premium of 1%. I also conducted an excess equity valuation and dividend discount model to add more color. The excess equity model returned a price target similar to my DCF and showed that an ROE of 33% is currently being implied for the stock. Calculating their current ROE the same way and not how I did it in my boxes would give a return around 50%, showing that right now the stock is undervalued. The DDM returned an intrinsic value right around the current stock price. Finally, I used an EV to EBITDA and EV to sales valuation, weighting Carlyle Group at 40% and the other three peers at 20% each. Weighting these three models, the DCF and the two relative valuations at 70, 15, 15, returned a price target of $74.28 or a 21.64% upside. One of the risks for Hamilton Lane is the concentration of their largest customers. If the company's returns were to materially deteriorate, they may lose their competitive advantage, and it would not take many investors to leave to lose a significant portion of AUM. Also, COVID-19 is still an imminent threat to the economy that could have adverse effects on deal flow and revenue. Finally, some politicians have proposed regulation that would significantly hurt the industry. While this is not a major risk right now, the general sentiment around private equity is always shaky and could turn south. Now on to management. This management team has been in the industry for a long time, has great backgrounds in educations, and has performed very well. The CFO, Atul Varma, joined earlier this year after the prior CFO retired. Right now, management is focused on aggressive growth and not necessarily huge margin expansion. To conclude, Hamilton Lane should be added to the AIM fund because they are a quality company with great growth opportunities. The macro environment has set the stage for increased flows to private markets, and Hamilton Lane is positioned in both the domestic and international markets to capitalize on this trend. They have established their competitive advantage and will continue to expand it. After their recent share offering and the recent market sell-off, they are at a great price point and should be a great holding going forward. Thank you for your time today, and I look forward to answering your questions.